Good day, everyone. And as always, welcome to our weekly market update provided by SC Securities. As always, we will be taking you over the weekly happenings of the stock market and some of the macro factors affecting us and the country overall, and looking at our secondary market and also delving into the global commodity markets and some global market news that pertain to this week. So without further ado, let's dive in. This week, we saw the actual market turn red. The ASPI actually fell by 0.03% this week. However, the S&P actually rose by 0.07% this week. The all share did actually see a considerable fall. This happened despite the government actually repaying a $1 billion ISB or international sovereign bond payment that was due on the 27th. Most of the drop we can maybe attribute to the fact that it is a month end and there will be some credit settlements happening and some profit taking. Overall, if we look at the turnover as well, last week we saw turnovers around this region and even higher, but we see a considerable downfall in terms of the turnover this week as well. The one consistent thing this week that has been happening is that net foreign selling has continued, as the weekly net foreign outflow came in at 1.6 billion. Thursday, we saw a partial recovery in the stock market, mainly driven by the food and beverage segment, with particular interest in distilleries, whilst the index-heavy counters such as Expo and LOLC continued their upward trajectory. However, the market did retrace on Friday. In terms of some of the macro news, so basically, continuing on from what we stated on earlier, the major highlight was that the government did repay $1 billion international sovereign bond or ISB before the deadline, which actually did arrest some of the default fears that were lingering on in the market. Now, in terms of other ISB payments for this year, there are none. The next two payments actually come online in 2022, with the first payment or the first installment of $500 million maturing on the 18th of January, that is January 2022. And a further $1 billion ISB maturing on the 25th of July in 2022. The repayment gives the government much needed breathing space. But however, the government reserves post-payment stands at around $3 billion. However, we estimate that the reserve levels need to be somewhere between $5 to $7 billion at current levels of growth. The State Minister of Finance has cited that there will be an influx of forex inflows close to around $2.65 billion over the next 3 months via a combination of swap deals with India and Bangladesh, some SDR allocations with the IMF, as well as a loan from the China Development Bank. On top of that, there is also inflows from ISBs by local banks, whilst there will be some inflows from utilization of underutilized assets as well. In terms of the overall picture, the balancing act does persist because the government has been significantly hampered with virtually no forex income via tourism, which is our second biggest driver or inflow of forex into the country. This has been mainly on the back of the COVID pandemic, and we do not see this actually improving in the medium term, purely because of the huge spikes of Delta variants popping up globally, especially in the European segment, which accounts for the largest amount of inbound tourism to this country historically. In terms of some of the secondary market news, like we stated last week, there was a Sri Lanka development bond issue of $110 million that came online on the 27th of July. So that was on Tuesday, and it would have closed by now. We do not have the final details as yet. The initial issue amount was $30 million with a further upsizing of $80 million. On Thursday, we saw that the central bank had accepted $58.6 million worth of bids for the SLDBs. Majority of the bids came in for the short-term 9-month SLDBs, which had a fixed rate of 7.69%. So around 48 million US dollars worth of bids came in for that short-term 9-month SLDB. The oversubscription of the initial amount is a positive. This is on the back of the fact that over the last 2 issues that were held in April and June 2021, the initial oversubscription was not attained. However, at the point of publishing this report, 46.73% of the issue still remains unsubscribed. So that is still somewhat of a growing concern. In terms of the commodity market or news around the global commodity prices, is that oil prices rallied this week. Oil prices actually saw an uptick of 3.55 US dollars per barrel, with the global benchmark Brent topping $76 per barrel. This was mainly on the back of US supplies tightening up further to its lowest level since January 2020. In terms of the other ticket size, other tickers, aluminium actually saw a huge increase this week due to mainly disruptions caused in the global supply chain as a result of the devastating floods in Henan province in China. So Henan province has one of the largest smelting plants, and due to the devastating floods there, that has actually curbed global supply and will do for some time. Gold prices held firm near a 2-week high, heading for their biggest gains in over 2 months as the Federal Reserve cemented investors' hopes that interest rates are going to remain low for some time. And copper prices also hover near multi-week highs on the back of the China flooding, whilst the Reuters report suggests that the second half of 2021 remains positive, with increased demands arising from higher electric car manufacturing. In terms of the global market news, the Asian stocks and European stocks falter on surge in Delta cases, whilst and on China's regulatory actions. So Asian stocks faltered this week as significant losses were incurred, and they are set to have their worst month since May 2019. This is mainly due to new Delta variant outbreaks in Thailand, Indonesia, Philippines, and Malaysia, which has resulted in further lockdowns and travel restrictions. The MSCI Asia ex Japan fell by 0.84%, whilst the Nikkei was down 1.71%. The fall was further compounded by the fact that investors were somewhat tepid or somewhat of fear due to the Chinese crackdown on its technology sector. European stocks also fell from record highs this week as concerns about fast-spreading Delta variant and regulatory actions in China outweighed optimism around around quarterly earnings seasons and the economic recovery. In fact, the Pan-European stocks 600 index fell by 0.8% this week. Those are the main highlights for this week. And as always, I will now turn it over to Harin, who will take you over the happenings of the All Share this week and our pick of the week this week, K-Gold Plantations. Over to you, Harin.
Thank you, Nuwan. So last week we were able to see how actually the RSI getting a bit overheated and get into the region of overbought region. So index made a high of 8,218.67, and from there onwards, from that key area of daily resistance 8,200, 8,250 that I have taken as a critical resistance. So making a high of 8,218.67, we were able to see index pulling back to the region of making a low of 8,075.25. So this means that we were able to see that after somewhat around a retest and going to the daily resistance, the index was able to make a high-low formation over here. So this would be high-low formation. So in order to get a confirmation that there could be another higher high, so this current daily resistance of 8,200, 8,250 needs to be broken. So after breaking it, we have somewhat around the February 5th high, that would be 8,361.4. So breaking this high, the current high that we have, 8,218.67, which is July 26th candle. So this needs to be broken along with the daily resistance of 8250 and 8200 8250, and reaching the 8361.8 will be able to see a higher high, another formation. And the other thing is, if the index fails to make a higher high, this is actually a strong level of resistance, as the index got rejected on 26th from this area. And we do know that RSI still remains to be overbought, as it is 73.34 still. So it needs to still cool down. And so if it continues to decline from this daily resistance, it could actually consolidate in between this area. So there needs to be a breakout over this daily resistance in order to go to the day that so expected high of the February 5th high, which would be 8,361.4. Else, rejecting from this daily resistance could initially bring the index to the daily support of 7,958,000. So this would be the initially. So index would actually consolidate in between this region for the time being, and if we are to be able to expect a proper breakout over this region, and we'll be able to see this daily resistance getting crossed, or else index would basically consolidate. So looking at 8 and 18 EMAs, so this would be the blue line would be 8, which is the short-term moving average, and the 18 would be 18 days moving average. So looking at it, what we can see is last week we were able to see somewhat around the moving averages had a bit of a gap, long gap, so that we were able to see that the correction was made somewhat around the higher low formation was made. And we have the 18 moving average at the daily support of 7,958,000. So this would this would basically mean that if if the index break the low of 28 July low, which is to 8,075.25, and going below the 8 moving average, this would indicate that it could retest, it could test the 18 EMA, which is at the daily support of 7,958,000. So moving ahead with moving ahead with our pick of the week, which is K Gold Plantations PLC. So what we can look at from it is somewhat moving in a higher high, higher low formation. So we had a couple of higher highs, higher lows, and we were able to see how the price getting rejected from the daily resistance of 120, 123 whenever the price comes to that key region. So last time, which is last time since this month, July 19th, we were able to see it's getting bit of overbought and coming to the daily resistance of 120, 123, and then getting rejected from that area. So there were multiple, there were a couple of multiple times that the price got rejected from this area. So first would be on April, we were able to see a couple of times it is getting like consolidating in between this 123 region and 110 and 123 in between this region. So again, on July mid, we were able to see somewhat around in July 16th to 26th, we were able to see that it's getting rejected over and over again from this key area of resistance. So for the time being, we can see that here we have a higher high, and we had the previous higher high over here and the higher low over here, and we have the higher high currently a higher high. So there needs to be a higher low formation. So this would actually mean that it could decline, as in if the price manages to break the current low structure, that means the low would be going below this region. So if it goes below somewhat around 117.5, if it goes below 117.5, it could come to the daily support of 110, 113. So with that being said, as we look it from the EMA's perspective, so as we had 8 and 18 moving average, what we can see is that it is trading below the 8 EMA, which is 8 EMA is somewhat around in 118.23, and we were able to see the price closing at 118 today. So this is not a good signal, as the price was actually trying to break this resistance and then coming below somewhat around the 8 EMA. So this potentially indicates that the short term there's somewhat around bearish momentum for a structural low formation to be made, and for such a low formation to be made. So it goes, sustains below this 8 EMA, be around 115. So this alone means that 115 would be another key area for us. So along with the 115 and the daily support level 110 to 113, this area would be a potential support and resistance and the consolidation area for this K Gold Plantation PLC stock. So it would sustain in between 123 and 110 and 123. So if a proper breakout of 123 occurs, we will be able to see the next daily resistance of 130, 133, that area. Else if the price manages to go below 117.5, we'll be able to expect 115 first, and then the daily support of 110, 113. So RSI is in the mid range, and it has somewhat around cooled down, because previously we were able to see it reaching the 74.92 area, and it is somewhat around the mid range now. So thank you. Over to you, Nuwan.
Thank you, Harin, as always. And everyone can catch this on our YouTube channel. We will be sending across this report to our client base. And please also follow us on other media platforms such as LinkedIn and Instagram. And as always, we thank you for tuning in for this week. And we look forward to having you again next week. Thank you very much.